Morning, everyone. It's a pleasure to be here. As Alan mentioned, I became executive director of New York Teachers in 2 years ago. In terms of history, I think one of the testaments to the stability of the New York State Teachers Retirement System is that since 1921, I am the fifth CEO of the system. So I think in terms of longevity, I hope that that continues. But it really is, I think, one of the secret sauces that we have a group of trustees that have long tenure with being trustees of the system. You've had stability in terms of the leadership of the system, and you have a staff that has longevity with the system. It's a remarkable figure, but over 60% of the staff of the system, which numbers a little over 400 individuals, have over 20 years of service to the system. So it's a very professionally managed organization. And in these times of fiscal and economic stress, I think that has boded us well. Thinking about this discussion, the things that come to mind are, this entire crisis was a crisis of liquidity, and it seems alignment or non-alignment of interests. And I think that liquidity for a pension system such as New York Teachers is really important, since on an annual basis, it's really a remarkable figure. Our retirement payroll, the funds that are needed to pay our over 130,000 retirees, is over $5 billion a year. So the New York Teachers system needs to generate $5 billion. We generate that through individual contributions, contributions from employers, but the majority of the contributions are generated through investment earnings. This breakdown really gives me great pride, and it also indicates the importance of having a good investment program with good partners whose interests are aligned in terms of generating the revenues we need. We ended the fiscal year June 30th of 2009 at a little over $72 billion. In 1990, we had assets at $30 billion. Over that time period, member contributions contributed $2.7 billion. Employer contributions generated $10.6 billion. But the majority of dollars needed to pay benefits, we paid out $53.5 billion. So this was at a period where the pension system assets grew over $40 billion. We still were able to pay out $54 billion. It's a tremendous testament to long-term investment strategies, really focusing in terms of your member payroll, and the fact that over time, there's been periods of volatility such as we've been through, but over time, having a strong investment program in place and a rigorous review of that program is really critical. For the members in this room, I think one of the aspects that really doesn't get enough press or importance is the fact that in these times, $5 billion that we pay out to our retirees really is used in this state. The majority of our retirees reside in New York State. The majority of our retirees live in your communities and are your customers. And the other aspect, which I think is very important, is that in these times of stress, when people are a little bit apprehensive about their income, one of the true benefits of our retirement system is the fact that every month these individuals can rely on a check that's on time and the right amount. Since 1921, we've never been in a position where that has not been the case. And I think that confidence level is really important for you as business owners and for our members in the system. And that's sort of what keeps us focused on our mission. How do we navigate through this crisis? I think one of the key elements is that we always start with making sure that we have over $400 million available every month to pay our benefits. What does that mean in terms of how we've structured our portfolios? We have over $10 billion in high-grade corporates and treasuries that are readily available to pay benefits. We also have the majority of our domestic equities in a passively managed structure. So New York Teachers was never in a position, as many of you may have read about, of other institutions that were having to sell assets due to this crisis, whether it be on the equity side or on the private equity side or on the real estate side. So we were able to operate through this crisis as we were before the crisis. So I think having the liquidity available was really critical. The other piece that has helped is that in terms of our private equity and real estate programs, although we made a significant commitments to these programs, the level and robustness of capital calls has gone down quite a bit. But that, I think, is a matter of where we are in the cycle. We are prepared when our general partners are ready to have the dollars available to commit to putting money to work. So I think that will result in robust activity and will generate confidence in the private equity program moving forward. I think the other piece that is really important is since we are players in the market and it is very hard to tactically shift a large fund such as ours, the importance of really looking at what we call our risk budget in terms of the equities portfolio, I think is very important. Because we were passively managed, we basically rode the waves, the peaks and valleys of the market. We are confident that long term, being in the equities market is going to be beneficial for our program and our members. So we are committed to maintaining equity exposure. It's about 42% is the target currently, and we plan on doing that. The last piece, I think, which is important, is alignment of interest. I think New York Teachers has been very rigorous in terms of seeking partners, whether they be in the asset management business, helping us run our equities program, because we do have active managers, whether it be in our real estate program, where we have a robust real estate program. We have co-development partners, we own hard assets, we own buildings, we have partners in terms of the REIT space. But when we look at our partners, I think the first question we ask is, are our interests aligned? And I think having that alignment of interest has really bode us well in these times of stress. So, in summary, I think it has been an interesting ride so far, but I think the ride is much easier when you have a structure and a program that is prepared for the downside as much as it is prepared for the upside. So in conclusion, I'd just like to say liquidity, 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 and alignment of interests are really keys to success. And I think in the end, our over 430,000 members demanded of us, because they should not be in a position of having to worry one iota about whether or not they will be receiving a retirement check at the end of every month. So with that, thank you very much for the invitation.